How serious is the sudden rise of inflation to levels not seen in 40 years? Have changes to the consumer price index how it's calculated, understated the actual current inflation and what it would take, therefore, to get it back under control? We look at an analysis done by three experts, including former U.S. Treasury Secretary Lawrence Summers. Hold on, Business Talk with Jim Campbell. We're joined by Judd Cramer, lecturer in economics at Harvard, received his Ph.D. from Princeton, and served as a staff economist for labor economics on the Council of Economic Advisors in the Obama White House. Marian Bolweis of the International Monetary Fund, the IMF, and again, Larry Summers of the Harvard Kennedy School of Government, former Treasury Secretary and Chairman of the National Economic Council under President Obama, along with Judd, did this working paper for the National Bureau of Economic Research comparing past and present inflation. Welcome, Judd. Good to have you.
Thanks for having me, Jim. Good to be here.
Okay, so inflation seemingly came out of nowhere. We've heard about the pandemic and the related supply chain with the Ukraine war and oil supplies. Was there too much Biden stimulus, too long Fed quantitative easing? Where did this come from?
That's a great question. We don't necessarily get into it so much in the paper, but exactly as you said, obviously there were supply constraints that we've had to deal with and we're still dealing with. And in addition to that, the support that the government gave through stimulus during the pandemic has been large historically relative to what they've done before. So there are analyses that are trying to break down, is it 50% supply, 50% demand? A recent paper from the San Francisco Fed said it was about 70% supply. We don't exactly take a stand on that, but it is important to know what we're measuring and how we can deal with it.
But aren't you really saying, too, that whatever this underlying cause is, that it's not driven by a short-term sort of spike related to either the war or the pandemic, right? You guys believe this is more systemic?
So one thing that we think is that it's definitely, and this is one of the main points of the paper, is because of the way that the current consumer price index has changed over time. We don't think that the way it's currently constituted is going to make it more likely that we're going to have this peak and then a rapid decline as we had in the past. We think that inflation is a little bit more sticky, to use an economic term, than it has been in the past. And we think that the housing market in particular is going to make it so that we will have continued increases in core CPI, perhaps for a longer period than people would like.
Now, Larry Summers was ahead of the curve that this was going to be a bigger deal than we thought. Is that an outgrowth of this paper, that conclusion?
That was a little bit related to other factors. We actually wrote two papers about this, and the first one touches on it a little bit more. I think Dr. Summers' analysis was primarily about what the output gap was. So we know that during COVID, we had a big contraction in economic activity, and then we responded with a stimulus that was, very large by historical standards. I think Professor Summers thought that it was too large relative to what that output gap was. And that was sort of his prompting to think that that could lead us to have inflation. And then what we show in this paper is that the inflation that we currently have, if we actually measured past historical inflation in the same way, they're actually even more similar than one might think, which might give pause to policymakers.
Which is kind of scary. We'll talk about that. Let me ask you that. You were in the Obama White House, and obviously Larry Summers was. And there was the feeling that perhaps the stimulus wasn't strong enough, proportionate to the economy. Did we end up fighting the last war this time? Is what you think there's too much stimulus?
Yeah, it was impossible to know during COVID, especially what the future trajectory of the pandemic would have been. I think what people think, looking back on the Obama administration, and I sort of got in after the initial the ARA Act, but I think the thought was that maybe if more money had been sent out then, the recovery would have been even more rapid than it was. So I do think that people definitely didn't want to go too small during COVID, whether they went too large or not. Secretary Yellen has made some statements recently, but yes, certainly it seems like the trajectory of inflation has been something that we haven't had to deal with, for the last 40 years, which is why our paper is important to try to get historical perspective.
Okay, so I'm going to ask you now to talk about comparing the past and present CPI and the differences. But basically, we hit an 8.3% inflation rate here. And I think your paper is making the case that I think 14.9% was around the peak in 1980, and that there's not the level of difference between the two once you adjust it, that you would look at just the pure numbers. Go ahead.
Yeah, that's exactly right. So actually this last reading was the last 12 months of growth was 8.6%, which is, as you said, a 40-year high. And the peak of the Volcker period, the sort of bad old days when we had to fight inflation, was 14.8%. And so you might think, okay, so we're still 6.2 percentage points lower than we are there. So we still have a little bit of room. But because of these important methodological changes, we actually took current practices and applied them to Volcker's period. That 14.8% becomes 11.6%. So in that sense, our 8.6% currently is a lot closer. It cuts the gap in half. So the idea of this paper is that if we actually take these current methodologies and look at that, then it really seems like the time to get serious about inflation is now, or was in the recent past. And I think the Federal Reserve recognizes that as well, but we just wanted to put some concrete numbers on this phenomenon as well.
Can you make it understandable what that difference is from, why it's really 11 versus 8%?
Yeah, so there have been a lot of changes. The great people at the BLS have, there's been a lot of statistical expertise that has been developed over the last 40 years. So they've applied some of that. But the biggest change is that prior to 1983, so during the Volcker period, the cost of housing was in the consumer price index. And the cost of housing and also mortgage rates were in the consumer price index. So everybody has seen recently that we've seen nationwide home prices up 20%. Mortgage rates just spiked recently in the last 2 months. And so in 1983, that would have led the inflation rate to be much higher. Currently, we don't include that into the consumer price index because housing is both an investment and a consumption good. The BLS has decided to exclude that from the measure. So because of that, this is the key factor in why inflation actually would have been lower in the past if they were measuring it the way they do.
Let me ask you, does the BLS set the parameters independently? Is there any political impact on that? Because obviously the CPI looks better for politicians under this definition.
So that's a question that we dealt with in the Obama administration. I know some people were very suspect over the Chicago guys doing stuff at the BLS. I will say that in my experience, the BLS, nothing but professional, completely apolitical. And so this was actually based just on economic analysis. The consumer price index should be the prices that people pay for consumption. When I buy a house, I'm looking to buy it both to consume the shelter of living in the house, but also as an investment for, future price appreciation. The price of Bitcoin or the price of stocks is also not in the consumer price index because that's an investment, that's not consumption. So what the BLS does is they found a new method, which is called owner's equivalent rent. So it's how much money is the homeowner would they have gotten if they rented their house out? And that's the number that goes into the CPI. Housing prices don't go in. So it was really based off of theoretical and empirical findings from economics, apolitical. But yes, you're exactly right. This change has had the effect of making current inflation lower relative to the official past inflation readings.
Okay, so if we accept that, it's going to be harder to get it really down. And I read that any inflation over 5% has required a recession to tame it. Are you guys saying that a recession is on the horizon?
I don't want to speak for my co-authors, but we've sort of seen that the Federal Reserve has gotten serious about this. They had a 75 basis point increase, and we've already seen a little bit of slowing of economic activity. I think it's too soon to know for sure if there's going to be a recession. Part of the outgrowth of the strong stimulus that we did have and the growth that we've experienced over the last few years is that household balance sheets are as strong as they've ever been. So we might have a little bit of a contraction in economic activity, but if household savings is there to sort of jump into the breach, we might not have a recession. But yes, the analysis that Professor Summers has done and other work suggests that most of the time when you've had the unemployment rate below 5% and inflation above 5%, it's almost always been the case that you've had a recession within the next 2 years.
All right. This paper was ahead of the curve on that. We'll be back with our second segment in a bit, and please check my book that's just out, Madoff Talks, Uncovering the Untold Story of the Most Notorious Ponzi Scheme in History, from McGraw-Hill, and now being made into a Netflix documentary that will hopefully premiere January of 2023. We're here with Judd Cramer from Harvard, and he participated in a National Bureau of Economic Research working paper called Comparing Past and Present Inflation. Now, if we take your assumption that it's a little stickier and a higher real inflation rate comparatively, well, it took 3 years for Paul Volcker to get inflation out of our system. Number one, he was my favorite Fed guy, because he was able to do actual short-term sacrifice. My question is, so is it going to be long like that? And number two, does our political environment, would Paul Volcker, to me, wouldn't even be able to function in today's environment?
Yes, I'm also quite a large fan of Paul Volcker, and it seems like the Fed has sort of experienced their Volcker moment in terms of the recent increases. And we will have to see if they have the strength to endure. And actually, what our working paper suggests is that if people had looked sort of in the past, sort of as we said, okay, Volcker encountered a larger inflation problem based on the numbers than we currently had. So some people would say, okay, well, we can do the tough medicine that Volcker did, but it will only take 1 or 2 years. But now when we look at the correct adjustment, we think that, yes, it would take about 3 years as well for the current Fed to get inflation under control. So it will take a lot of political will and guts to do that, perhaps, and we will see if that transpires.
That would be a big deal at this stage, particularly coming out of, did we stay with quantitative easing too long? To me, is this responsible for asset bubbles?
It's a good question. I think that, obviously hindsight is 2020, and especially with the pandemic, I think if you had told, I was somebody who was, maybe thinking about buying a house during COVID when I was in a city in a small apartment. And if you had told me that in 18 months, housing prices would have risen 30% nationwide, I mean, there was no way I would have predicted that. So obviously, if the Fed had known that this was the trajectory, I think they would have tried to pump less liquidity into the market. But I think it was very, very hard to make that decision at the time. So definitely, all else being equal, looking back, maybe there was a little bit too much liquidity, but I don't think that the wrong decisions were made at any point. Since 2000, the target that the Federal Reserve looks at is now the Personal Consumption Expenditure Price Index. So that's the PCE, which has been a little bit lower than the CPI. So those two they move similarly, but not exactly in tandem. I think in general, the Federal Reserve has committed to this 2% level. I think there are some fears, perhaps, that, as you say, the pain that is required to get down to 2% might not be palatable. And so it might, we might stop at 3 or 4%, and we might overshoot and go below 2. So we will see. I think what's important is that in the future, we get to a level where right now Americans are very concerned about inflation. When we get back to a level where Americans no longer have to take inflation into account for a lot of their everyday decisions, that will be better for the American consumer.
In a couple of sentences, what's the difference between the CPI and the PCE, the Personal Consumption Expenditure measure?
And the Personal Consumption Expenditures looks at all of the expenses that you're actually spending in a given month. And then that is going to be the measure of inflation. So there are small technical details. They tend to move in tandem, but the PCE tends to be a little bit lower.
And core inflation, is it looked at removing food and energy? Is that correct? And is that, to me, those are two huge expenditures. Is that legitimate?
They're two huge expenditures, but they're very volatile. I mean, we know, especially because of the war in Ukraine, we've seen prices in both. Ukraine is a large food exporter, but also the price of oil because of some of the dislocations. So in general, when we try to look at the core CPI, it doesn't, if overall inflation is 10%, but core CPI is 2%, that's going to be little, it's not going to make the consumer feel much better because they're spending so much money on the food and on the gasoline. But in terms of trying to forecast where the economy will move in terms of inflation, it's useful to get rid of some of these volatile groups to really focus on the core. So both of them matter economically, but in general, if we're trying to predict inflation in 2 years, the core CPI has historically been a better predictor than what has happened to the price of oil recently, because, hopefully that will reverse itself at some point.
One of the things you guys looked at major inflation bips since World War II. And there was a supply issue after World War II. The 1970s, we had guns and butter, stagflation. 80s, we had Paul Volcker. Do you guys feel, are any of those the best representation of what's happening now?
So that's what we looked at exactly right. I mean, we've had to, because we've been lucky to be in this low inflation environment for the last 40 years, we've had to start looking back. We think there are elements of, the World War II, post-World War II, Korean War era, sort of shortages at home, prices rising. There are elements of that to the current situation, but we don't think any of those is a perfect comparison. So I think on net, we would say that the best comparison is still the Volcker era. Oh. But importantly, what we think, when Volcker finally decided to, when he got in and got tough on inflation expectations were so high. They were built into the system, and that's what was really hard. Not only getting down current inflation, but getting down inflationary expectations. So today, because long-term inflation expectations are still lower, we think it's a little bit more tenable situation for the Fed. But I think the best comparison is still the Volcker era.
Is that essentially a psychological assessment? I don't know if that's the right word.
No, exactly. I mean, it is, because in general, what matters for inflation in large part is going to be when, somebody goes in for their raise for the next year and they say, hey, I think prices are going to be up 5%. I got to keep up with inflation. You pay me 5%. And so actually Chairman Powell, in his last press conference, he singled out the survey from the University of Michigan where they're just asking consumers, what do you think is going to happen to prices? And that number had been ticking up. It seems like it might have gone down a bit. But yes, in general, it's psychological. So I think that the Fed and Volcker and the current Fed as well, being able to get these things under control will be very important.
When you were on the CEA under Obama, what was your sense of Vice President then Biden's decision-making process and understanding of these kinds of economic issues? Yeah,
I think President Biden, Vice President Biden at the time, was very engaged on these issues. He always, as is the case now, was always focused on the middle class and what was going on and what are these bailouts only helping Wall Street. Some of the folks that I worked with at the CEA became his staff. His former chief economist, Jared Bernstein, is now on the CEA. So I think President Biden was always engaged on these issues. And so I think it's.
I was impressed that he called Larry Summers recently, because obviously Summers has been in the paper for saying you guys are late, getting to the game. So it does show reaching out. I was impressed with that. Thank you very much for your time. I really enjoyed reading this, because I have felt for years that the CPI is understating reality. So I think it's good that you tried to get your arms around that. It's a fascinating work. Judd Cramer from the Harvard University Economics Department, right?
Yes, sir. Thank you very much.
Not the business school.
Not the business school.
Hi, it's John Iannuzzi, producer of Business Talk with Jim Campbell, and we have been discussing in very sobering terms the economy and what inflation means to all of us as we head into summer.
All right, I want to thank Judd Cramer, and we're really very fortunate because Larry Summers is probably the preeminent voice on this right now, and obviously a major figure in the economics world, having been the Treasury Secretary under President Obama and that chairman of the National Economic Council. And when I asked if they would consider coming on, he actually responded almost immediately and saying Judd was the right person to come on. So it's very much appreciated. And obviously, he's not going to get into politics, Judd, but I have, Bill Cohen, as you know, who wrote a blurb for my book and is very well tied into Wall Street. He thinks that if Larry Summers had been appointed Treasury Secretary and not Janet Yellen, that we might have avoided this. But even more important, if he'd been the chairman of the Fed over Powell, that inflation would have been managed much more aggressively, and that's a position that he's long wanted. And I think it would be good for the country. In fact, and to me. The Fed has so overshot quantitative easing, which is essentially just printing money, for so long that it's just gotten to where we believe the stock market is always going to go up because they're always going to switch to lower and lower artificial interest rates to keep the asset bubbles up there. We've had basically interest rates at 0% for almost since 2008. Now, does anybody really believe that real interest rates should be at 0% over all this time frame? And, when you artificially constrain things, you're going to eventually have to pay for it. And I think that's what we're looking for. And I do believe that I remember the Paul Volcker era, and people don't realize how painful that was.
Well, honestly, we've done hours on this, and we'll do many more hours on this. But I did want to, in our last couple of minutes in this segment, and with our final segment that will air today, pay tribute to someone that we both knew and got to know. You got to know him quite well in the last couple of years of his life. William O'Shaughnessy was a broadcaster extraordinaire. He was a radio station owner-operator. He was an author. He was a character. When he would enter a room, Jim, everybody kind of knew it. Aside from the fact that he looked like a professional wrestler with the big bouffant white hair, and he would wear these, $2,000 suits, and he was just such an interesting character. But he took a shine to you, and he would call me and want to know what you were up to, and he had you on the air. He was so happy that Madoff Talks was so successful, and I thought maybe it'd be nice if you shared a few thoughts about a fellow broadcaster who, by the way, worked very close with a foundation that took care of radio guys who had fallen on hard times.
Yeah, let me tell you, this guy was a mentor to all of us on different levels, and certainly in local radio. And when you mentioned that he treated me well and said good things about me, I would sit here and say this guy is like a god to me, and for him to be, he made people feel good about themselves. In other words, he also was totally committed to local radio, which we all know has largely disappeared in the world. And he was one of the last of the old guard. The other thing was he transcended political lines, which I like, which nobody does anymore. He was Mario Cuomo's closest friend, and they literally met over an interview and became buddies. And, he referred to him as a saint almost. And at the same time, he was very close to Donald Trump. And Donald Trump and Mario Cuomo have precisely zero in common. But he found a way to find attributes in each that he really appreciated. He ran WVOX,
WVOX and WVIP.
WVOX and WVIP. He ran them for the local communities there. And he embedded himself in the community. He was proud of his communities. And he was just a great servant of the people, a great servant of folks that he mentored. And I say servant because he actually tried to help you grow and tried to, make you feel good about yourself. And just one of the great human beings that you'll ever meet. It's a huge loss. And as John will tell you, the guy worked right up until it was all over.
He was sending out handwritten notes. I was still getting them in the mail after he died, which means that the postage, it was posted right before he passed away. I mean, he really was just an interesting guy. And Jim,
another thing that really impresses me about this guy is, he's a great orator, obviously. He did a lot of public speaking along with a lot of radio, but he was also a brilliant writer. And you've rarely seen that combination. You must read some of his books. They're just brilliantly written. And also, he wrote op-ed pieces for decades and decades, whether it be local or national, always incredibly well worded. He was always doing the toasts and the intros to people. And he was a mentor of Rush Limbaugh, just about anybody in the radio business at some point.
Yes. And it was not out of the ordinary to have the cardinal, or a bishop as your morning guest, and then John Sterling, the voice of the Yankees, as your afternoon guest. And then on the way out the door, we'd interview a sanitation worker. So and a funny story. I would do the welcome board, right? And I wrote Cardinal Egan's name bigger than the sanitation worker's name. And he laced into me to change that. Really? Everybody was even. So
it was great. I always admire, too, that he was willing to be a contrarian, too. He was a fan of Andrew Cuomo, for instance. And after everybody was basically stepping on his political grave, Bill was still out there, defending him, saying he was presidential material. And I just admired the guts,
Well, again, this is part and parcel with why he was so fascinated by your story with Madoff. I mean, he loved a good, as he would say, Iannuzzi, he would go, I love a good Lazarus story. Rising from the ashes was biblical to him. This was beautiful. So
Shakespearean.
He's
the guy that got you interested into radio. Talk about that.
Without a doubt. So I went for a summer internship. And when the summer internship was up, he took me down to the 21 Club. And he said, just follow me. And I would follow him around the room. And he would talk to Kenneth Cole. And he would talk to Henry Kissinger. And then he would sit me down with these people. And I mean, I literally felt out of my element. But then I looked and I thought to myself, Jim, I said, if he believes that I should be sitting here, well, then who am I to say I shouldn't be sitting here? So he had that effect. And the loss of William O'Shaughnessy on the local broadcasting world is already being felt.
And by the way, the way that he mentored you has benefited me, because we were in Berkshire Hathaway in Omaha, and there's huge Mario Gabelli that I would have given anything to interview. Iannuzzi walks right up to him and grabs him and brings him right up.
Oh, yeah. No, if anything, O'Shaughnessy felt like we were giving them the privilege of having a soapbox. So I really changed the way I looked at the platform that we're on right now. So what I'd like to do is to wrap up this hour by playing the last interview he did with you right before the book came out. And you'll hear in it, it was so evident that he was enthusiastic about what was coming for you.
I was so honored that not only did he let me come on and do that, but he had a whole yellow, pad of notes he'd taken to ask me. And I might add, by the way, you met your wife at his station.
Oh, absolutely. Listen, she had the good sense to get out of radio, but we met in the hallowed hallways of WVOX, and I'll never forget. She just said, listen, she said, stick with this guy because he obviously really cares about you. And then she left and I didn't see her for a while. And then, I will say this, we've got the invite every time a new book would come out. I mean, he really, once you were in his circle, you were in his circle.
I have to say, one of my big honors in life is he listed every single person he's interviewed. And these are presidents, all over the world. And then Jim Campbell is listed.
And you're in there. Oh, absolutely. Yeah. Absolutely. Yeah. All right. Well, listen, I hope that everyone enjoys the interview that's coming up to round out this hour. It's William O'Shaughnessy down at Whitney Broadcasting interviewing Jim Campbell, whose book was about to hit the shelves.
Thank you very much. And God bless Bill O'Shaughnessy's life.
You see, I've been through the desert on a horse with no name. It felt good to be out of the rain. In the desert, you can't remember your name, 'cause there ain't no one for to give you no pain.
John Iannuzzi, producer of Jim Campbell Radio, here as we discussed. We were saddened earlier this spring to learn of the passing of Whitney Broadcasting president and former head of the National Broadcasters Foundation, Mr. William O'Shaughnessy. O'Shaughnessy had a way of recognizing when success was just around the corner, and he saw that Jim Campbell's book, Madoff Talks, was going to be a hit. Here's an interview O'Shaughnessy did on air with Jim Campbell just before his book was published by McGraw-Hill.
This is Bill O'Shaughnessy. I think you're going to like this one. I interview so inartfully, awkwardly, and imprecisely, as you well know. Today we're talking with a master interviewer. I've been interviewed by him. His name is Jim Campbell. James Campbell, and he comes from a Connecticut station. He's up in Vermont. He's in a station near Yale. He's all over New England, and he's written a book. And you won't believe, where'd you get the idea for doing a book out? What's that guy's name?
I think it's Bernard L. Madoff.
Yeah,
people may have heard of him. Bernie Madoff.
I love it.
Biggest Ponzi scheme in history, and I'll tell you how it happened. I was doing an interview with a woman that wrote a book that Andrew Madoff, who was his son and girlfriend, cooperated with. So I said, before you come on, can I interview Andrew, which would be off the air because he couldn't talk.
This is the son.
This is his son, Andrew, who was the younger son. The other son committed suicide, and Andrew died of leukemia. But so we spoke on the phone off the air. And I said, I think so far that you're innocent. And he said, and then we're going to be live tomorrow. I asked him some tough questions, which he answered off the record. And then the next day, I said, I'm going to say on the air that I think you did not know. And he says, I'm going to listen to see if you do that. And I did it. And then he introduced me to his mother, Ruth, who I became friends with. Mm-hmm. And then Ruth introduced me to Bernie in prison.
Tell me about Bernie Madoff. You've exchanged a lot of, his family. Was he just a bad guy?
He's actually a low-key guy. He's actually comes across as very friendly and personable. The problem with Bernie is that he cannot accept any level of defeat or anything. So he goes overboard on stuff, and that's what led him to do all kinds of nefarious stuff. He had some big investors who actually made much more money than he did over time, and he couldn't say no to them. And I mean, they would literally down to the level of they would call up and say, I'd like this backdated to this, I want this level of profit and this gain, or the other way, I want this loss for my taxes, and all made up. And so what Bernie told me initially was that he lost some money in 1992 because of these guys. Instead of calling them on it, he took the loss and then doubled up on Ponzi money. The truth has ended up, unfortunately, being since he's in business in the end of the 60s, on that illegal side of the business, there was never any real trading. It was a complete fraud from day one, which kind of boggled my mind.
Jim Campbell, who made money off Bernie Madoff?
The number one guy was a guy named Jeffrey Pickauer, who made $7.2 billion off of Madoff and had to give it all back. But Bernie never even worth over $1 billion. So there's an interesting thing. Most Ponzi schemes, the guy at the center is making all the money, which tells you that it was not about greed. It's about ego and power and an inability to say no. And the guy, let me tell you, unbelievably brilliant mind. The front side of his business was called a market-making business, and what that meant was if Schwab was looking to do trades, they would route them through Bernie's shop. So that Bernie did the order execution and everything, and Schwab had the customer out front. Totally legitimate, totally honest, overboard on Wall Street ethics. And it was like, ends up being like a mafia business. It was like the restaurant out front. And back here, completely illegal.
Jim Campbell, did anybody get their money back from this schemer?
That's a good question, too, because if people look at it two different ways. $65 billion is what was lost based on their last statement. $65 billion. But the way the recovery trustee measures himself is the original investment that people put in was $20 billion. The rest was all their alleged gains, right? So since that gains is phony, they view themselves as, let's get them back what they initially invested. They have gotten back about $13 billion of that $20 billion, of which $7 came from that one guy. But the people that lost the money felt they lost another $40 billion.
Jim Campbell, what do you put on Bernie Madoff's tombstone? Thief, con man. What is he? You know him pretty well. You wrote the book.
I would say that he is a great con man precisely because he doesn't see himself as a con man at all. It's a really interesting question because he was a king of Wall Street. He built, by the way, I don't know if people know this, the NASDAQ, right, which is all the over-counter stuff. He built the platform that automated that. The way that business used to work, it was a pink sheet, and it would have, a stock on it, and you would actually look, the price would obviously be a day old, and then it would list brokers that sold it. You would call them up over the phone, and that's how the business was transacted. He built a computer system that automated that whole thing and ended up stealing 10% market share from the New York Stock Exchange, which was a monopoly basically then. So half of his tombstone would have read a king of Wall Street, very successful, ethic. The SEC used to come to Madoff, this is how good he was as a con, used to come to Madoff to find out what was going on at other brokerage houses, because a lot of the stuff is so esoteric they couldn't understand it. So they go to Madoff. So he wasn't trading through his own firm. He wasn't even trading at all. So people knew that something was up. They didn't know exactly. Some thought front running. And so I've asked these people, well, why wouldn't you turn him in? And
that's a good question.
Yeah, they don't turn him in because, first of all, there's like an omerta on Wall Street, but also they have no incentive to. Number one, if you are what's called a feeder fund, which means you're investing people's money in hedge funds, and I'm competing against you, and I think Madoff is a fraud, I want you to keep putting your money with Madoff because you're going to end up, I'm going to beat you in the market in the long run. And the other reason is if a firm says, I'm turning in Bill O'Shaughnessy because he's doing insider trading, you open yourself up to everybody coming and looking at you.
Thank you, Jim Campbell, broadcaster, author, and that should be a hell of a book, Bernie Madoff, All the Secrets. Thank you. Great stuff.